Everybody, morning. The monster set up right. Grapefruit monster. I start every day with a 40 right after I get up. Nice big 40-ounce glass of ice water. And that's before I even get to the monster. So get my system flowing, and then I add a monster in there. So by the time I'm coming live, I'm getting close to 2 quarts of liquid put down before I even get on the show. Anyway, grab your caffeine of choice. I got this fresh can of grapefruit monster. It counts as grapefruit juice, right? We're about to talk about some stuff that requires an energy level that coffee just can't touch. Because today, we're not just talking about stocks. We're talking about possibly your job. Jack Dorsey, the bearded wonder who gave us Twitter that Elon bought out, just fired, or announced he's going to fire 4,000 people. Not from Twitter, but from his new company, Block. That's Square, Cash App. Now called Block, but they own Square and Cash App. XYZ is the ticker. And he's basically getting darn near close to half of the workforce being let go. 47%. Some people say 40, some people say 47. I guess it's a rounding error at this point, with 4,000 people being let go, gone, just like that. And what did the market do? Did it panic? Did it punish him for the carnage? No, the stock went up. It's rocketing. It's up like 24% in the after hours after they announced that. The market didn't just approve it, throwing a dang party. And that's kind of how layoffs go. They're really good for the stock in the short term. But with that much less people to help make the output go, can they still make money? Or is the AI coming for everybody's job? I mean, this right now is the AI layoff economy that we've got going. And this isn't just a story about a struggling company trying to keep it together. Block has been crushing it. I mean, their gross profit up 17% year over year. They're not firing people because they're business is bad and they have to fire people. They're firing people because they want to, because they can, because, as Dorsey put it, a significantly smaller team using the tools that we've been building can do more, better, and faster. And those tools that he's talking about, well, that's AI. I mean, it's here. And this is one of the first dominoes of a solid company in the fintech space, letting go of a bunch of people. Think about it. If you're the CEO of a publicly traded company, you're under constant pressure to boost those profits. Like, your job is to manage that stock price, get everything going. It's like when you're a public company, it's kind of like job number one, even if you don't think about it that way. My friend Jack Carter always says, bet on the jockey, bet on the head of the company, because if they can keep it together, if they can keep the company going on the rails and keep the stock price good and manage that stock price, then it's probably going to keep going up. And so as a CEO, you're under constant pressure to boost profits, drive efficiency, get that stock price up. I mean, those are your primary objectives as a CEO. And Jack Dorsey firing half of his staff, and then his company gets a 30% pop in the stock price overnight. I mean, what are you going to do, right? Like, what are you, as a CEO of a competing company or just another company out there, going to do? Do you write a memo about how much you value your employees, or do you start an emergency board meeting to try to figure out how you can copy what's working for XYZ, what's working for Block? How can you do the same thing? How can you up productivity to the point where you can let go half of the cost, half of the labor cost? I mean, this is what I'm kind of calling the domino theory of AI layoffs. It's not just a question of if this is going to be coming. in other places and other companies. This is the question of who's the next one. And the answer is probably going to be everybody out there in a public company. I mean, just look at the list. Amazon has already cut 16,000 jobs. Dow Chemical is actually already slashing 4,500. HP, Meta, Nike. I mean, the list is going on and on. Goldman Sachs is already warning that responsible companies out there using AI have already let go. So far, just with the ramp up we've had, the list is like 10,000 a month average. This isn't like a future problem coming in a year or a year and a half, 2 years. This is a now problem for a lot of people. So how do we, the magnificent monsters of capital in these markets and the investment world, how do we profit from the purge of dead weight? We follow some of the dominoes. First off, you have the dominoes themselves. The not Domino's Pizza, but you've got these companies that are pulling the trigger, that are making AI happen, that are actually getting more done with less people because of the AI revolution. XYZ was an obvious one, but easy money probably already made there. The real question is who's following along. You've got other players, other major players in the fintech space. You got PayPal, you got SOFI. They're in the same boat. They have high headcounts, and they desperately need to show investors that they're serious about AI, optimizations, saving money. If they start announcing similar cuts, we could see similar pop to their stock price. Now, second, you have companies that are building the guillotines to chop all these heads, reduce the headcount. You've got the AI infrastructure plays, picks and shovels go-tos in this AI revolution. You got big dogs. You got Microsoft. You got Google selling cloud services, enterprise tools that make all this possible. You got Palantir with their AI platforms that dig deep in the big data. And of course, you have the king, NVIDIA, making the chips. And you got AMD come nipping at the heels, trying to take the throne from the king. I mean, these companies are selling weapons for the war on white-collar, middle manager type people. And business is booming. Third, and this is where things take a dark turn in this whole story, you have losers. I mean, there are companies that are going to get steamrolled in this whole adventure. Think about the staffing agencies. Companies like Manpower Group, MAN, and Robert Half, RHI. And that's Mike Alpha November and Romeo Hotel India. Their entire business is based on getting butts in seats, placing people in jobs, temporary jobs, and maybe they get hired on. But what happens when temporary jobs don't exist anymore? We just spin up an AI to do that little marginal task that we might have hired an intern for. What about traditional HR software companies like Workday? When you got fewer employees, you need less software to manage the fleet of work, right? I mean, you need different software to manage the fleet of AI over the fleet of human bodies doing the work. So that fewer employees means fewer need for HR software. But here's the contrarian play in all this, the little twist that most people might miss. What happens when Klarna fired 700 customer service agents and replaced them with AI? What happened? Guess what? They had to hire a bunch of them back because AI did a crap job at being a customer service agent. So there's a real possibility that we overuse that CEOs and maybe overfire, get a little too aggressive, and this turns into possibly an AI layoff regret trade, where companies cut too deep too fast and find themselves actually hurting the bottom line instead of boosting it up. The churn could be insane and create some chaos, and maybe staffing agencies survive and become the brokers of a new flexible AI augmented workforce. But for now, the trend is kind of clear. The dominoes are falling. Jack Dorsey didn't just fire 4,000 people. He sent a message to every CEO in America that the market will reward you if you replace your employees with AI and do it efficiently, where you still make more money faster. He's not the first. He's sure as heck won't be the last one out there. So grab your monster, sip it carefully. Maybe coffee's your weapon of choice, but let's check out where some charts might be making some money today, how we might get her at her, get it done. There's the market bell. Just crack-a-lacking. Need to be on a different tab before I pop it up. Chew. Pop her up, buttercup. Jumping over, share screen. All trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, a little bit of fun, a little bit of entertainment. Not a recommendation to be buying or selling anything I talk about. Stocks, options, bonds, forex, futures, cryptos, treasuries. You might lose money. I mean, the statistics say if you naively trade, you're going to lose money. So be careful out there. If you need somebody if you need somebody to tell you what to do, there's Edward Jones' office just opened up underneath me on the first floor. You can go hire them and consult them and let them tell you how conservative you should be with your money. But I highly suggest you just learn how to do this stuff yourself. And looking at the cues, yesterday I predicted we'd kind of stay in the red box. Interestingly enough, we hung with the roadmap line more than we did. I mean, we kind of found a floor here at this big options kind of level where the call and puts were balanced, but we tended to stay on the upper end. But now today, taking a little dive. So we'll come back around to this toward the end of the show. Takes a little while for the gamma to get cooking. Check in our old pal SPY here. Pull this one over to today. Similar kind of deal. We kind of hung with the balance level, then we went to the upper end of the range. We'll come back to this toward the end of the show. Why the end of the show? Well, for 0-day options, they take the first hour is kind of amateur hour in the market anyway, and a lot of chaos, a lot of options fly, a lot of things cook, and the gamma level just seems to be a lot more solid after the first hour. So I'll come back to it toward the wrap up, and we'll dive in, try to make some predictions about where price might stay today. But look at the overnight price action. Looking a little bit soft. As I mentioned yesterday, this rejection on the breakout was indicative that we were going to get more downside. So far, we may hang out here in kind of this chop zone that we've had for a couple weeks until the end of the month, which is today at the close. That's the last day of February trading. And due to seasonality of March, we may take a spill the first couple weeks of March. That market has a cruel, cruel way of flushing everybody out. The market was super heavy on puts right in here. Went ripping. Everybody thought we were going to do a breakout. Put buyers kind of got bummed a little bit. It was sufficiently bumming out the put buyers. Getting people back on the calls. NVIDIA calls were crazy. And then what do? We rip the call buyers, and the market has a nasty habit of just screwing everybody. And a visit of the daily roadmap line here on the S&P 500 would be kind of what I expect. Look at the overnight action on S&P. Kind of bearish. Like we couldn't break above the 15-minute there. Rejecting on down. Yeah, as I said, for a couple days now, we may need to visit that daily roadmap line in the S&P before we can go higher. NASDAQ, a little bit different story. We've been riding on the roadmap line. So this one might take a little bit deeper flush here. We could see some more downside action. Could come on down in here and make it, so S&P made a high up in here. In flip over to it. We made an all-time high right in here toward the end of January. But NASDAQ, it made its high all the way back here at before Halloween. This was a lower high. And that looks like a giant correction. And for proportion-wise, if this plays out, you've got kind of a 1, 2. This could be a 3, 4, 5. And we could end up down here in the bottom part of the range. And we could get that big dip right there in the first part of March. Get a little relief rally and then a final flush out toward a Liberation Day anniversary kind of thing. It's kind of funny. Historically, we kind of do these flush outs in March. This is 20-year average on the VIX right here. Taking the VIX and averaging it up, we tend to do these flush outs in mid-March. Almost every year. Just kind of like we also get some chaos in October almost every year. It's just kind of the way of the market. And ignoring that kind of heartbeat of the market, it doesn't have to happen. It doesn't have to have absolute chaos, but we tend to do this every year. It's just kind of a ebb and flow, if you will. Some years are worse. Some years we get the COVID drop. Some years we get the Liberation Day drop, which was actually bigger than the COVID drop. Other years, it's relatively benign, but still some chaos. So ignoring that fact can be detrimental to you and your financial well-being. Looking at this right here, the futures indicating we may come on down. So the next couple of weeks could be kind of soft. But at the same time, we could see Russell popping off here. Now, it would not surprise me one bit to come back and retest this breakout level back here. You may be like, what do you mean breakout level? Maybe you don't come watch me all the time. It's the same high. This breakout level is where we established the high back in 24. Late 24, we established this high. We did this giant pullback. We came blasting up through it. In the summer, we kind of ground our way through it. Popped up, got near some targets. Now coming down, retesting, reaffirming that breakout would be healthy. This 24,500 area. Do that and then set us up for going higher, like 3,100. That's the next fib line up here. 3,100. So be careful here. I don't think we're taking a bigger spill. This could be a little bit of a spill, but not going to be as giant as what is shaping up in the S&P and NASDAQ. So we may see small caps outperforming, and we're seeing big money rotate from big tech into small caps, even some mid caps. They could outperform. Typically, when we see this kind of start to the year, historically, Russell outperforms the S&P by over 40%. Outperforms by over 40%. How would you play that? IWM is a way to play. It doesn't mean we won't get a pullback, but we could be outperforming the S&P by 40% here on IWM. And if you want to get even spicier, UWM adds some leverage to the Russell 2000 without having to buy any options. Now, this kind of cuts both ways, though. If we get a sizable pullback, it amplifies the pullbacks as well as the upward moves. It's ways to play. Be careful out there. Substantial risk of loss in all trading. Oil, what an interesting story. Trying to break out again here. I don't think we're going to do the war on Iran before the next new moon, but we'll see. We'll see. There is a lunar eclipse of some sort coming up. Opportunity, or we're just going to chill here. Apparently, this is the first time we've ever deployed a full squadron of F-22s. So that's kind of interesting. They're sitting at a base in Israel. First time we've ever put out a whole entire squadron at one time. At least that's what everything tells me on the internets. You know, I'm open to being corrected if I'm wrong there. So somebody means some serious business on that anyway. And GC got this potential to pop up right here, find some resistance, and can watch the retrace happen. So be careful. This would kind of match this first drawdown here. And this kind of choppy correction up. And we're setting up for another flush right there. Set up for another flush. Bitcoin just chopping in here like Bitcoin does. Now, if that was the initial move up, we're looking for a 618 to hold right here. And then work our way up for this C leg higher. And that's C as in Charlie, not C as in the ocean. Holding that 618 right there. So that if you want a level that you're like danger, Will Robinson danger, 65.5. If we start getting below that, things aren't looking so hot for the continuation up here around 75,000. Now it could dip, we might see a dip and a rip. These things often poke their feet below 65, below that 618 level. These things being pretty much everything with a price. We will very often dip below, especially when things are being really sloppy like it has been here. So set your level down there around 65.5. If we can stay above it, great. If we dip below it, calls into question a little bit. Are we still going to get the pop? It's still the most likely thing we're going to see. In the short term, I'm playing for it, selling puts aggressively on IBIT to try to capture a little bit of pop here. Ethereum, sort of the same situation. If we hold that 618 right around that 1900 area, should be good for a pop. Pop not quite as big proportionally. We see something right up in here around 2400 on the next move. Dollar index, kind of hanging with my homies here. Finding some resistance. That's 1, 2, 3 so far with a higher high. This can turn into a lower low than that low we had right back there in January. I would expect a touch of this roadmap line. It's just what I expect, but it has all the makings of pushing lower. That can push our commodities up. But also, this right here could dip a little bit, and since this right here has no real structure in it, could be a first move up. Could be working on a 3-wave kind of chop here, and then we could get a bigger move up. So we can see gold and silver pushing up a little bit and then taking another bath. Starting to fit here. So we may see gold and silver push up just a little bit. And then as the dollar pops up into this more ideal spot to finish up this A, B, C, we may see gold and silver get crushed on a second move down, as big, if not bigger, than the first move down we had just a few weeks ago. Watch out for that. That seems to be what we got cooking right here. This may be a B wave flat right here. And then we see this rip right up in here and get that pullback in gold and silver. It's kind of what it looks like cooking. NKD, watch out for this. If this starts rolling hard, set an alert here at 57,000. We start breaking down below that. Probably going to get a bigger correction in the market and probably going to come all the way down here. It's a global liquidity indicator, and if global liquidity is getting a little tight, then U.S. markets, especially the risk-on markets of S&P and NASDAQ, are going to probably take a bath, and Bitcoin might not be immune either. Usually it's a sell everything situation. Like I always talk about gold being a hedge. Well, the initial move is sell everything and figure it out later. Margin calls and crying in your beer. Apple, unfortunately, is maintaining this lower high situation. It has set up the target at 295. We need that continuation to confirm we're going there. Could do another retrace back to the roadmap line or just a 618. Either way. And then turn and burn. So I still expect the upside. That's my primary expectation here until we start breaking down. Stop is dollar below the low. Down around 242-ish. Amazon. So far, this is holding this low pretty darn well. We have this gap down to contend with. That's holding resistance going higher. Then we've got the roadmap line right in between. Then we've got another gap down resistance right there. We've got this pile of resistance. First resistance, second resistance, third resistance. So it's piled thick and deep here for Amazon, but this reversal is building. You may see a 618 retrace and then go for the gold, at least try to push through that first gap. May take a rest at the roadmap line, retrace a little bit, push on through, rest a little bit, push on through. Might be what we see. This is a longer term play for potential to come on up here like 300, 400, 500 on Amazon. Google, looks like we came up shy of the resistance so far, but this could be part of that move right there. And then we take that next leg down to match the first one right there. Similar to gold. Yeah, Kimberly's in a secret location. Secret. And no, we're not moving. But some good friends of us are. Good friends of ours are moving. It's kind of a bummer. Meta, holding this higher low, set for a pop. And the pop, when we actually break up above this 740, gap down resistance here, when we actually, see, this is why I always talk about gap down resistance. Strong. Pushed Meta right back down. So there were people that bought right here. They doubled down here. When Meta got back up to fill the gap, they said, I'm cool. I'm GTFO. Yeah, GTFO. GTFO. And what does that do? Down pressure. Now holding higher low. Next attempt. If we can break up through that 740, 750 area where that high is. Probably setting the stage to go to 1100. Possibly 1300. That'd be really nice. Microsoft. Still being soft. Still under that bigger 618 level. 413. Still consolidating here. If we can get any Momo action going, got some gap downs to contend with, and the roadmap line is sitting right in the middle of that. So that'll be a major resistance coming higher for Microsoft. No sign that this is the bottom yet. Just sitting there on the lows. 3 or 4 candles does not make a reversal. Nvidia, guess where we're going. So that was the A wave down. Back here last year in December, November, October, November, December. This was the B wave bull crap retrace. Topped it out right there before earnings. Guess what we're doing next? Probably coming to retest the breakout. Be careful out there. I've been talking about this for a good long while. Doesn't have to go down there, but it's kind of likely. Tesla. Just stuck on, like, I guess this just can't buck the market trend at this point. Till something, until the news or narrative or whatever, the excitement can break out of the market. We've got this kind of watermelon seed squeeze thing cooking here. Can we pop it? Do we drop it? We're going to flush out. We may come down to like 380, maybe 370, find some support before we can bounce bigger. If we could break out, right now, upside resistance sitting here at the 475 and 500 all-time high here. Ideal upside 517 area. But I don't know that it can buck the market being soft. I mean, it's holding up really well compared to the downside there. But then Netflix is not going to buy Warner Brothers, and boom, shakalaka, mofo. Coming up into the roadmap line area. So they bailed. They completely bailed on their buyout offer. Looks like they're going to take that money they were going to spend on it and buy some sharebacks. Buy sharebacks. Do buybacks on shares. Get the words out of the mouth. Dell popping. Look at that. Beautiful. That's potentially done on the downside for Dell. I've been talking about Dell and HP, and these are all like underperformers. We've got some potential to pop big. Block, of course, getting rewarded for firing a bunch of people. Still a downtrend until we can break out of the roadmap line and the downtrend of highs. So is this a narrative switch, or we've got to get through that roadmap line, got to get through that downtrend of highs, got to get through that 618, gotta. Big pile of resistance right there. If we get through it, upside 110. There were not many companies on the poppers list today. It's kind of a thin list. So we're seeing some energy stuff chopping. But the big list was like 160, so we're like 30 something companies or tickers on the poppers list. Got some energy popping on, oil popping up. Then there were like 160 companies on the decliners. Yikes. That's things moving $2 more down in the pre-market. RNA. Wow. 80% down overnight. That's why you don't play biotech, pharma. Dang. I guess somebody thought that was getting approved with that pop right there. Somebody thought that was buyout or whatever happened, and then pow. That looks like an acquisition. Novartis completes the acquisition of Avidity. ASML. That could use a retrace, but the upside target is 1650. Duolingo has been getting punished on this AI software narrative. Why do you need Duolingo app when you can just talk to ChatGPT and it teach you how to speak a different language, or maybe just speak the different language for you, and you don't even have to know it? I don't know. SanDisk needed a pullback. Zscaler has not been looking bullish. Probably coming down here to the 60 to 70 area. GE Veranova definitely needs a pullback. That one getting a pullback quickly. May go lower low than 82.90 here. Goldman Sachs probably needs to revisit the roadmap line. Flutter Entertainment can't seem to find a bottom here. Carvana saw something here. Massive insider selling going on here. Let's see, do they have it on here? I just saw a note about unusually massive insider selling. Let's see. I might be able to pull up a platform that shows this off really well. CVNA. So this is called Ortex. I do pay for a membership here. Look at all these selling. Look at all this selling. Massive insider selling. You'd see no insider buying. That's interesting how it's not giving me data. Let's see here. Oh, it didn't. It logged me in, but didn't log me in. That's awesome. There we go. Try this one more time. CVNA. Hey, maybe later. Thanks. Yeah, we know that you might be interested in using the API. CVNA. Back to insiders. Yeah, look at this. 141 sells, 0 insiders buying. That's not exactly the most vote of confidence for your company. $179 million in sales and nobody buying. And that's not the kind of numbers that are healthy. Right there. That's not the that's the people saying, you know, our company's probably overvalued. Gonna get while the getting's good before the public figures this out. So I would be cautious on that one. Glad to have you back, Robert. Intuit getting punished. Still on the AI trade. Look for some opportunity. Yeah, that's gonna get a pullback. That's gonna get a pullback. That still being punished. You know, do we need CrowdStrike if AI could just monitor? I don't know. Capital One, compared to other seeing Visa beat down. MasterCard, beat down. Discover / Capital One, beat down. That's rough. I guess people still believing that Trump's putting the screws to them. Royal Caribbean has potential to come on down. SOFI. Potential that that's the bottom. I'm looking for this to get up through the roadmap line here. Set up the upside to be good for 900 on the upside. JP Morgan kind of chopping a little bit. Looks like we may need another leg lower, just a little bit down in this 275, 285 area. Get down in there. That could be a bottom, and we can go higher again. CEG, we're getting really close to triggering the long. Above 336. We have 443 upside. TSM, watch for the retrace. FAS. Big picture, this thing has an amazing upside potential. Getting near this 618 bounce for the bounce. You can see this thing rocking and rolling. Workday, I'm not sure, man. That's lower low. 115, maybe on the bottom side. MDB, it's a lot of nasty here. Nasty Nate. Coinbase probably going to take a bigger spill down in the 80s on Bitcoin. I mean, we could get a little rally back up to the roadmap line and then take our spill down here. AMAT, it's going to be played out at 401. Watch for the retrace. Snow. Back testing this breakout. Has beautiful big upside potential. But does their software matter? I still think it optimizes data centers. But can AI build a better optimization of data centers? I don't know. DoorDash, potential bottom here. Break through the roadmap line. Upside potential 310. Sezzle. And watch for that resistance and then next leg down. Oracle. Now, a lot of stuff getting punished. Adobe. Still seeing a lot of software get punished in here. Accenture. That could be at the bottom. Shopify. I like this potential for this to be the bottom. Getting back above the 150 would set that up for 200. That's big numbers right there. You could aggressively pick up some here. Lock in some profits here on a move up through or add and shoot for that up there. Now, if we break down below this, it's not looking too good. So, you know, $20 risk versus having $50 risk over here. Just got to take your pick. And that could be a longer term play too, because it's gonna take a little bit to get out of this funk. I like that upside potential there to 200. I don't think we're gonna stop buying stuff. And look at that beta 345. I mean, this thing probably prints some freaking money if you're selling puts. I have to look at doing that. Morgan Stanley sitting on the roadmap line. Maybe able to bounce. APH, Amphenol. The rare little pullback here, it gives opportunity 173, 180 on the upside, and the last run had no pullbacks at all. It's a data center play. Lululemon. I said that the other night. My kids are like, what? How does dad know how to say that? Looking for this to probably take another spill. Setting up a head and shoulders. And when that plays out, it's probably right down here. It's on my bullish watch list, but it needs to finish this flush out. We came up shy. I thought we were going to do it right back here, but we didn't. We decided to fart around for 6 months. Probably needs more flush before we can go higher. Kava out, like breaking through the roadmap line. This might be heading on up to that 260. That could be a nice upside potential right there. Kava getting his crap back together. AMD, I've been talking about we need just one more little push. One more little lower low makes this all look fine and dandy. Dip below that, make it all look so good. If we get that move right there, I'm probably buying AMUU. Forgot the A. AMUU. I'm going to sit on that for a while. It's AMD with some 2x leverage. I'm just going to buy some shares and sit on it. Probably what I'm going to do. Circa was popping on Circle. Circle surprised everybody and beat on earnings with huge amounts of money. Didn't get, roadmap line still way up here. Still not bullish. Still a downtrend. Don't get too excited here. But it did make an outsized pop, surprising everybody that we're actually making money. Surprise. When the government requires you to buy treasuries, it actually, and you can't do stupid stuff with your money, it actually makes money. Who could have figured that out? So, guaranteed money from the government by forcing them to buy treasuries. Still a downtrend of highs, though. If we can get through that roadmap line, which little bitty baby piece of roadmap line at this point, because it's still a relatively new company, IPO right over here. But that lower low right there, that could be it. That could be the lowest low that we make, and we go bullish from here. That looks like a bullish kind of reaction here so far. I am long CRCA. It did do a reverse split recently. 10 for 1, but remember, ETFs are not companies, so this is not like a dumpster fire situation. It's just an ETF trying to stay solvent. So watching for this to pop on up. Probably come back to the roadmap line. Looking for this to hold. I have some puts sold at 74 and at 69 and probably some at 67. I rolled the 74. I rolled everything out a week to March 6th. Got paid like $1.50-ish, I think it was, on the 74s. Not bad for a week. MSTR. This is not a bullish reversal type price action reaction here. This is a similar thing we were doing up here before we dropped on out. Makes me nervous that we could hum around in here. We could pop up to the roadmap line, but then eventually pop down again. Yeah, crypto winner. What are you going to do? Yeah, crazy pop. That chart needs to retrace. It has 5 up, potentially complete. A retrace back down to this 92, 100 area would be healthy to go higher. Amel Marble. Whatever reason I put an extra B in there when I say it. I guess because of the ALB. Albemarle. Whatever. Working our way through this zone. We came down close, but we didn't quite retest. So if we can get above this zone, we're probably set to go on major higher. Talking about 500 to 1,000 area. Major target higher. For those who've been watching, I've been talking about this potentially, I talked about it not being great below the roadmap line, and then when we reversed, I was like, this is a breakout above the downtrend highs. This is setting up for the big rally, and 1,000 is where this confluence of levels comes in right up here. You got, one down here at 500 and 1,000. That's why 500 to 1,000, those two confluences right there of levels, and then ridiculous 3,000 up here. So it's a big lithium play though. Datadog couldn't stick the breakout. Probably coming back down to 50. Let's see what we got. PLTR. This one looks good for the bottom being in place. We could dip just a little lower, but 218, 220 on the upside This looks good for that being the low. KKR, can't seem to find the bottom here. Private equity getting smacked in the face. Probably needs a dip down in the 70s. All right, setups good for the day. These things completed the Apollo pattern on the daily chart yesterday, at least based on my Python scanner. And take a look, see what's cooking. I picked up that bigger bounce right there. That high right there, closed above. 60 is the target. The TradingView algorithm, which is a little more, let's say, picky. A little more picky on the setups. Doesn't like that one. So be careful if you're chasing that one. BYD. This is Boyd Gaming, not Chinese battery maker. Fired off the entry here. 90, 94 targets. Not great statistics historically. Caesar's Palace. That's a downtrend all day long. But statistics say that the downtrend doesn't actually matter that much. So 27 on the target. This can still pop up and hit that and still go further down in the downtrend. So that's the target. Doesn't have a long history of that. IAC. Here's the high. Here's the low. Entry right there. 41.91 target. Stop is always dollar below the low. Whatever it is here. 33. So it'll be 32.30 on the stop. And 17.88. 89. No statistical significance on the history. This one fired off back here. Has not played out. Has not stopped out. Fired off back here. Firing off a sub bounce. My Python app aggressively finds these little sub bounce things in here. And that closed right above there. Kicked off the 144, but it's still got the 148. If you wanted to get in now, dollar below the low would be this low back here at 130, which it got darn close to stopping out, but did not. So you'd have a lower risk to higher reward ratio here if you wanted to chase this one. There's your reward, and your risk would be down at 130. So there you go. It's like a risk 6 to make 11. That's actually really good from right here where we are. If we pop up and hit that 148, you can book it at 144. Not bad on that one. Reasonable. QSR. High, here's the low. 74 targets. No statistical significance. SCI is the wrong ticker. Look for the US version. There we are. A lot of choppy sideways, but choppy sideways has been hitting targets. There's the high, there's the low. 88.50 targets. Stop is dollar below the low at 74. 40 trades 90. This one's smoking hot right here. Despite this one kind of chopping, look at this. That is good. We've got enough trades to indicate that this is a statistically significant outperformer, much higher than 75% with 90% success rate. And a profit factor of 2.5 is basically 2 times the average trade. So this is a good one right here. SCI. You wanted something that looked pretty darn good for a pop. I may get into that one later. I'll have to see. Have to see if I got any capital available for that. STE, here's the high, here's the low. Entry right there. 276 on the upside. Another solid numbers here, solid numbers here. That's an outperformer. It's greater than 75, which is the average. So this is an outperformer. And 5 is like, what is that, 4 times the average? I mean, that's like check plus plus. This one tends to get the performance. And it could take a while, but Solid performer right there. 2 solid performers today. That's a beautiful, this is a beautiful setup right here. I don't know that it's got to work. There's no statistical significance to it, but this is like a textbook trend pullback, potential continuation, 89 target right up there. And then TFX, a little bit choppy on this one, downtrend. Here's the high, here's the low. Didn't quite make it look pretty, but 143 on the upside. If TradingView will actually fire off here, that looks good, that looks good, this looks good. But right now, it's actually still below the roadmap line, is still in a downtrend, so TradingView doesn't like it. That'd be one to keep an eye on right there. If we can get above that 124, it'd probably be good for popping on up to 143. That's the list of setups. Let's go check out SPY and QQQ now that we've got some options data. Wrap this baby up today. Thanks for coming, everybody. Thanks for being here. Make sure you give me a like, thumbs up, reaction, chat, comment. You know, all the things that help videos do better. Share with a friend, phone a friend, share with a friend. That'd be super awesome too. That's cool. I threw that right on top of that fib line. That was stupid. Stupid. So let's see. Bring over the gamma. Check it out. Bullflow.io. This is where I get this. It's like 30 bucks a month. Links in the description if you want to grab it. And look at that. Pretty solid bubble right here. See this bright red right here above my head? So we could push this on up into the 688. Oh, man, look at 690. I can't leave that 690 out of there. 700 million, almost 800 million. Balanced with $1.2 billion down here at 680. So we're going to go 679 to 690. Almost where I had it sitting. It's funny. 679. So at 680 level would be where I would kind of expect it to come hang out, actually. And without even looking at the levels, at 1.2, now it's $1.3 billion. And we may go visit that and just kind of sit and hang out. That's interesting. The levels don't jive with the heat map. Still got data from yesterday loaded in here on the heat map, or on the levels map. Causing some skew. Look at that put gamma, $2.5 billion. That's mostly like that big level right there, mostly from yesterday. $8 billion put gamma, but that doesn't show up on the heat map. Yeah, it's pulling up expired options, I guess. Glitch in the matrix. I'm still gonna go with 680. How's our old pal? Oh, cool. QQQ. Let's see what we got. So that's what I'm going with here. We'll see if it. I guess I should do a secondary. We'll put that secondary at 684. I'm not sure why that $8 billion is showing up on the levels, but not. I think based on the heat map, probably cruising down here. Oh, man. Ugly on the Qs. Ew. Let's see what we got. So I just drug this over earlier, and yeah, look at that big level down here. 5, almost 600 million at 600. So I'm gonna go with so 610 on the upside and 599 on the back, down on the back side. 610. Not even a gap fill, really. Barely a gap fill. 599, which is really darn close to where I put it. And then look at the level. 600 is hard to ignore there. I bet we go visit 600. Yeah, this is a lot cleaner here, this chart. We can hang out at 605 into the close. I bet we visit 600, but I bet we hang out at 605. Right in the middle of the box. I bet did we already touch 600? No, we didn't. Didn't touch it. So let's do that secondary line down here. I bet we touch that. I bet we end up here. And we did touch it on Monday. But I could easily see this going boop. That's kind of what I expect for today. Come back at it. Same bat time, same bat channel. 9:15 in the morning on Monday, and do it all over again. I'll be on Market Masters with Jack at 11:30. I'm going to go through the top 10 wheel stocks for all, basically a top 10 wheel stocks, and it'll have stuff for all account sizes, pretty much. Have a great day, and I'll see you later. Be safe out there. Your account you save, maybe your own, Nobody else is watching out for you but you.